Okay traders, welcome to the first video on my channel teaching SMC. Now if you don't know what SMC is, then honestly you're missing out. It stands for Smart Money Concepts, and it's basically a way for us retail traders to gain an insight into institutional theory. Now I'm not going to lie and say to you that we're trading like the banks. I know a lot of these like other SMC traders will say that, but honestly we're not. Can do is follow in their footsteps and try and hop on the same trades that they're taking, because they're the people with the big money and they're the ones that are moving the market, so we don't want to be trying to trade against them. And that's basically how I took this trade, and that's what I'm going to be explaining today. So this video is going to be looking at how the market makers manipulate price during the Asian session and how we can take advantage of this as retail traders. Not everyone agrees when the Asian session is, but for me personally, I look at it as 12 AM until 6 AM, GMT +1. So you can adjust price to your time zone. And I use this indicator called Asian Range, Nico 948. So you just come to indicators and then search Asian Range. There, it's just this one, Asian Range by Nico 948. And then you can come into the settings, copy mine if you want to, but this is what I use. And it just creates a nice box and shows you the Asian Range. Now, before we get into the charts, I'm just going to explain the concept and the theory behind this strategy. Okay, so obviously not every setup is going to be perfect, but I'm just going to create a kind of textbook setup for you here. So let's say price creates a demand zone here, which gets broken to the upside, and then price consolidates in the Asian session, creating a range, which then gets broken, taps into the demand that you can see on the left, and then offers an entry. So let me just mark this up. Okay, so here's the marked up version of it. You've got your high time frame demand zone, which causes the first up move, and then the Asian session where liquidity is created both above and below, because there's low volume in the Asian session, so price can be easily manipulated. So here's an annotated version of the textbook setup. You've got your higher time frame demand zone, which causes the initial push up into the Asian session, which can be easily manipulated because there's low volume, and this forms an Asian high and an Asian low, where liquidity will be resting, as retail traders like to, open a position and place their stop loss below equal lows, targeting wherever, or opening a short position with their stop loss above the highs, targeting wherever. So there's liquidity below the lows and above the highs. Price then breaks this, sweeps the liquidity from the higher time frame demand zone, and you can get risk entry just by placing a position like this, targeting initially the Asian highs, but then higher up. But the risk reward on that isn't as good as, say, waiting for confirmation. You can get a lower time frame demand zone, and then the risk reward will be a lot higher, as you can see. And the reason this works is because institutions need liquidity to fill their huge position sizes, and so they're going to manipulate the markets to create this liquidity and induce retail traders to open positions, which will then create lots of sell orders below here, which then they can take by buying and then push price up. That's what it looks like textbook style, but if we go back to the charts, this is a trade I entered on, and I'll show you the proof here. So if you go to your higher time frame, let's say the 2 hour, you can see this clear demand zone over here, which we can just mark up and then bring across. If you look at the high of this, just at the top it says 1.28544. So if you remember that number, and then we go back to say 30-minute, the low of this candle is actually the exact 1.28544. If you look up there, so it did actually just touch into this higher time frame demand below the Asian low over here, and then you can wait for your break of structure, which we got there. You can call it a change of character if you want. But yeah, break of structure, strong candle upwards. So this identifies this as our new lower time frame demand zone, and then I just simply place limits. Targeted this bit of structure initially. Now my stops are at break even. I took half the position off, and I'm targeting actually up there, 1.309. But my trade's now risk free, so if it does come back, then that's no big deal. This does work. Just back test it and then test it out in real trading and let me know how it goes. I'm just going to give you another example of a trade I took here. So on AUD USD now, on the 50-minute time frame. So you don't have to use these like hour and like 2-hour higher time frame demands. It depends on what kind of time frame you're comfortable with. You can use the 15-minute and then the 5-minute for your lower time frame, which is what I did here. So just marked up this demand zone below the Asian low here. You can see that, you know, we got a break of structure, so that was a validates this demand zone. And I went on to my lower time frame. Price tapped into it, pushed up. I waited for break of structure, which I got, and then new demand zone here. Place my limits. You can either put your stop loss below there or below the high time frame for, you know, you have a high win rate but smaller risk reward. Personally, I like to just go for as big risk reward as possible. I can handle the lower win rate. And then my first target was the Asian highs for a 7% gain. My second target was actually these Asian highs up here, which I can't remember how much that gave me, but that was 23% gain in one trade. Obviously, I didn't hold all of it till the end, but it did play out nicely. Tapped into it, had a reaction, and then carried on upwards. But yeah, that's how it works. And I'll just give you a quick POI that I'm looking at the moment on AUD USD. If you want to also add this to your watch list, just hit. I'll see how price reacts off there. See if there's any liquidity created, and then you can just use this setup live if you watch the video in time. So yeah, thanks for watching, and make sure to like and subscribe.